I will go through the famous concept of Stacey Burke, who is trapped and who is in the money, and show you this together with my multi-timeframe approach with fakeouts and breakouts. So stay tuned. So what is a fakeout? What is a peak formation? And how do we spot trapped traders and traders in the money on the chart? So here you see one full cycle. It looks complex at a first view, but it isn't really. So if we look at the previous, so we say current is this one here, previous time frame. So let it be a day, for example. So we have the previous high and we get a breakout. So as soon as we have a breakout, we have breakout traders in the money. So we are bullish above this breakout level. Then we put in a high on the day. It might pull a bit back and closes here. So here is closing price. So the next day, we're trading inside first, as almost always. And in this case, we get another breakout. So now we have two breakouts in a row. We might have even three or so to get the signals of 3 days of longs. So we are still bullish above this breakout level. It might be overextended, so we don't care about this for the moment. So here now we have traders in the money and we have liquidity at the breakout levels. So the breakout traders break even stops. Then we see what happens next. So if it pulls back in on the day, this is a fake out on the day. So that's the first bearish signal. It's not extremely bearish yet because we still have the breakout traders here with the last full breakout bar closed. They are still in the money. So it might only be a pullback. So this might give you a trade for a short on the day. But it's at least a first bearish signal. Also, if you look at Stacey Burke's logic of the 3-day cycle, so if we would be at the high of the week here, then this would be a potential day one 3-day cycle, but it's not yet confirmed since we haven't hit a daily level on the other side yet. So then from there, we have two more escalations, if we want to call it like this. So we have previous day's close. So if we are trading below that, this is the bearish rollover of the candle, how I call it. So we are trading up here, even being breakout. This is a green daily candle. Then we get a fake out high, a bit bearish. Then if it rolls over the closing price, then this day, the whole day is trapped above closing price. So that's even more bearish. And then if we lose the last fully closed breakout bar, that's this one here, this one closed in breakout. If we lose that, that's a pretty bearish signal. So this is also then a day one 3-day cycle in the week confirmed. And from there we would expect price to pull back and trade further in the other way. So this is also, if you think about peak formation and engulfment, that's the same thing. So you have multiple pushes to the top, and then you get your engulfment that engulfs this whole structure. And as soon as you get a close down here, this is a pretty bearish signal since you have all this structure above this breakout level trapped. Then another variation is, as we know, for the 3-day cycle and also for all other time frames, if the breakout level is lost the next day. This is still valid. So you are in breakout here, a breakout here, and this closes, and then you might lose this the next day. And still this is a fake out high. And then this still applies. I mean, you then have a breakout bar that's closed up here. So this is already even more bearish once you close here. But then the whole logic is the same, that the whole upper structure gets even more trapped with the closing price here, and then finally trapped with the previous breakout bar closed. Then you have the whole structure trapped and it pulls back. So this is the logic you can apply to every time frame. So this works on 1 minute, on 5 minute, 15, 1 hour, 8 hour, as I look at it a lot, daily, weekly, everything. So this is, markets are fractal, as we know. This is a structure and a logic that you have to burn into your subconscious mind. It happens all over. So let's look at the charts to see how this works out in detail. Now looking at the daily. So here you see a new start into a week. That's gold currently. You see we have 1, 2, 3 days of breakout. Today we broke out of previous day high. You see that here. A little peak formation above that, and now it's pulling back down. So that's the daily fake out high at the top here, trapping this structure, probably the whole of Asia in a death line setup. So that's the death line setup. So you have volume above a critical level, pulling back down, retesting. So that's a daily fake out high and gives you a bearish overall signal for the day for the moment. But you still have the daily breakout here intact. So this is not a full reversal signal on the day. So it's a potential day 1 3-day cycle, gives you a bearish signal for the day for a daily short trade if all other time frames and the daily setup is aligning otherwise. But you're not looking at a full reversal yet, as long as you're trading above this daily breakout bar. So you see it also here from the trend predator indicator, daily fake out high on the current, breakout on the previous 3 days of long. So this overextended, a fresh daily fake out high at the top, so bearish, but not fully bearish yet, as long as we are trading above this daily breakout bar. So that's the logic on the day. Now let's look lower on the 15 and look how it looks there. So now looking at the 15 minutes, zooming into gold price action of today and looking at two different situations concerning a fake out. So here you see a peak formation high trapped above the daily breakout level. We don't care about that for the moment, but we look at price action here in the last moments before the reversal. So you see here that's a breakout that closes here in breakout. Then you get here another breakout that closes back inside. So the wick goes above this one here, and then it comes back in. So that is a fake out high. But we did not break the last fully closed breakout bar. So that's already bearish. But for a reversal, I always look for a close of the 15-minute bar in the other direction. So this is something to watch, but this is not yet an entry signal. Then you get, for the next candle, you get a next breakout of the high, faking it out. I marked it with this level here, closing back inside down here. So here you see this engulfs the whole structure, losing the closing price of the candle before, faking out the high, and also losing the breakout bar here, closing down here. So this is then a fully closed peak formation high with an engulfment, and you see here, as we often look at, 3 more pushes back up before it then collapses and reverses down. I mean, this would not have been an entry signal, of course, because we would have been in daily breakout. So you want to wait until the whole structure here loses this level, and this would be then after this one here. You get another engulfment, and you would look at the lower time frame to get an entry losing this daily breakout level. So this is more or less a classic situation where you get fresh fake outs. So fresh fake out is if you get a breakout of the last bar and then you close back inside. That's a fresh fake out. So that's a classic situation, and here you see the whole cycle. Then maybe one more variation, which you also see often if you don't get a fresh fake out. So here, for example, you would have a breakout of this 15-minute candle, closing bullishly with a fully closed breakout bar here. Then you get another breakout here that closes bullishly up here. So no fake out for the moment. So it's a breakout of this one here, closing up here. So another breakout. Then the next one trades inside and then loses the breakout level. So it rolls over first. Here's the closing price. So roll over is a bit bearish. Then you're losing the breakout level, which is then the bearish signal. And then you even you even lose the opening, this closing price here, closing down here. So this would be a confirmed fake out. Not yet breaking this one, but you already had a closed breakout bar up here. So this is then a full engulfment of the upper structure and the bearish signal, and then you would look for a short entry from here. So you could even take this one here. You are in a bearish situation on the daily. You have a 15-minute fake out high confirmed. Risk reward would probably be nice. You could also then look on a time frame lower, like a 5-minute, and look for another 5-minute fake out high to get a better risk reward. Here, that's what I typically do. But this is how this different scenarios of fake outs work out. So I hope that was helpful. This is what I do all day across all time frames, starting from the monthly, weekly, daily, and then down to the 15 and 5-minute. It confirms setups and it confirms especially entries. And the good thing is a fake out is a trap on different levels. So the higher time frame traps confirm your setups. The lower time frame traps give you a safe entry, because once you have a fake out with time rotations from the levels, then you typically always have enough fuel for the move to at least go to break even. But typically then these trap traders are punished and you get the move away from it for a nice trade. So I hope that was helpful. If you have any questions, let me know. And have a nice day, and thanks for listening.